Hey everyone, welcome back to Corporate Decoder. Today we're diving into a document from Tenax Therapeutics. Think of it as the company's version of show and tell, but instead of crayon drawings, it's about votes, directors, and whether or not the company is paying its executives too much. Spoiler alert, we will talk about all of that. This document is called a definitive additional materials filing, basically extra info for a shareholder meeting. It outlines what Tenax Therapeutics wants its shareholders to vote on at their annual meeting. This is your friendly neighborhood reminder that if you own stock in Tenax Therapeutics, you have a say. The meeting is happening soon, so pay attention. It's like your chance to play Simon Cowell, but for corporate decisions. First up, the election of directors. It's like choosing the all-star team for the company. They're picking from a list of nominees, including people with impressive titles. The board is recommending you vote for all of them. Next, there's a proposal to tweak the company's rulebook. This involves amending the certificate of incorporation, which is like the company's constitution, to reflect some changes in Delaware law. It's about protecting officers from certain lawsuits. The board also recommends voting for this change. Another proposed change is about how stockholders can take action. The goal is to make sure all decisions are made at official meetings rather than through informal channels. Again, the board wants you to vote for it. Here's where it gets interesting: executive compensation. This is about how much the top executives are getting paid. It's an advisory vote, meaning the shareholders' opinion isn't binding, but it sends a message to the board. The board recommends voting for their current compensation plan. They're also asking how often you want to vote on executive pay in the future. Every year, every 2 years, or every 3 years. It's like deciding how often you want to check the price tag on something expensive. Finally, there's the appointment of the company's independent auditor, Cherry Becker Hart. This is like hiring a referee to make sure the company's financial statements are fair and accurate. The board recommends voting for this. Now, let's step back and look at the big picture. Tenax Therapeutics is essentially asking its shareholders to rubber stamp its decisions. It's common for boards to recommend voting for their proposals, but it's up to the shareholders to decide if they agree. The changes to the certificate of incorporation regarding officer protection are interesting. It suggests the company wants to shield its executives from potential legal issues. This could be a good thing if it encourages them to take calculated risks, but it could also be a bad thing if it allows them to act without accountability. The executive compensation vote is always a hot topic. Shareholders need to decide if the executives are being paid fairly for their performance. If the company isn't doing well, shareholders might want to send a message by voting against the compensation plan. Overall, this filing is a routine exercise in corporate governance. It's about giving shareholders a voice in the company's decisions. Whether or not those voices are actually heard is another question. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.